The U.S. Securities and Exchange Commission, SEC, has recently intensified its regulatory actions against prominent players in the cryptocurrency industry. With lawsuits filed against major exchanges and platforms, speculations have emerged regarding the possibility of the SEC targeting Tether USDT, the largest stablecoin in the market. This article delves into the SEC's ongoing crypto crackdown, dubbed Operation Choke Point 2.0, and explores the potential implications for Tether. The SEC's crypto crackdown, a sign of Operation Choke Point 2.0. The SEC's aggressive legal battle against key crypto firms indicates a renewed focus on regulatory enforcement. In recent months, the Commission has taken enforcement action against prominent exchanges such as Kraken, Bittrex, and lending platform Nexo. The recent lawsuits against Binance and Coinbase, both industry giants, have intensified the debate surrounding the SEC's intentions. Lawsuits against Binance and Coinbase, unregistered exchanges and misleading practices. In its legal complaints against Binance and Coinbase, the SEC alleges that both platforms operated as unregistered exchanges, offered unregistered securities, and misled customers, among other violations. These lawsuits come at a time when Coinbase, in particular, has been urging the SEC to provide clearer regulatory guidelines for the crypto industry. In 2022, Coinbase filed a petition requesting regulatory clarification regarding how securities laws apply to cryptocurrencies. Tether USDT, the next target of the SEC? Considering the SEC's actions against other significant players in the crypto space, some voices in the community have raised concerns about Tether becoming the SEC's next target. Tether, as the largest stablecoin in the market, plays a crucial role in facilitating crypto trading and serving as a bridge between cryptocurrencies and traditional fiat currencies. Previous controversies surrounding Tether. Tether has faced controversies in the past, primarily related to its claims of being backed by a one-to-one reserve of US dollars. Critics argue that Tether's reserves might not be fully audited, which could pose risks to the stability of the cryptocurrency market. Additionally, questions have been raised about Tether's transparency and its relationship with the crypto exchange Bitfinex. Tether's response to regulatory scrutiny. In response to concerns and regulatory scrutiny, Tether has taken steps to increase transparency. The company has published attestations to verify its reserve balances and undergone audits by independent accounting firms. Tether has also made efforts to improve its compliance procedures, aligning with global regulatory standards. Potential impact on the crypto market and U.S. investors. If the SEC were to target Tether, it could have significant repercussions for the broader crypto market and U.S. investors. Tether's status as the largest stablecoin means that its disruption or regulatory action could have a domino effect on the liquidity and stability of the entire ecosystem. Investors relying on Tether for liquidity or as a stable store of value may face challenges in their trading activities. Tether's legal and regulatory challenges. Examining the concerns. Tether has faced scrutiny not only from the crypto community but also from regulators. One of the primary concerns is whether Tether holds sufficient reserves to back its issued stablecoins. Critics argue that without proper audits, there is a risk of Tether not maintaining the claimed one-to-one ratio between its stablecoins and US dollar reserves. This lack of transparency has fueled speculation about potential market manipulation and instability. Regulatory environment and increased oversight. The SEC's recent crackdown on the crypto market indicates a shifting regulatory landscape. With the rise in popularity and market capitalization of stablecoins like Tether, regulators are increasingly concerned about the potential risks they pose. The lack of clear regulatory guidelines for stablecoins has led to calls for increased oversight and regulatory frameworks to address issues such as reserve backing, transparency, and investor protection. Tether's efforts to address regulatory concerns. Recognizing the need for transparency and regulatory compliance, Tether has taken steps to address the concerns raised by regulators and the wider crypto community. The company has engaged in third-party audits to verify its reserves and published regular reports attesting to its reserve holdings. Tether has also made efforts to improve its compliance procedures, implementing robust Know Your Customer (KYC) and anti-money laundering (AML) policies. Collaborative approach. Industry and regulator cooperation. To establish a sustainable regulatory framework, collaboration between the cryptocurrency industry and regulators is essential. The crypto community acknowledges the need for effective regulation to protect investors and maintain market integrity. Engaging in constructive dialogue and cooperation with regulators can help build trust and ensure that regulations are reasonable, practical, and in line with the unique characteristics of cryptocurrencies. Potential implications for the future of Tether. While the SEC's actions against other crypto firms have raised concerns about Tether's future, it is important to note that targeting Tether would have wide-ranging implications. As a key player in the crypto market, any regulatory action against Tether could impact the stability and liquidity of the entire ecosystem. However, regulatory scrutiny can also be an opportunity for Tether to demonstrate its commitment to transparency, accountability, and compliance, which may strengthen its position in the long term. The importance of investor education and due diligence. As the regulatory landscape evolves, it is crucial for investors to stay informed and exercise due diligence when engaging with cryptocurrencies and stablecoins. Understanding the risks associated with the crypto market and conducting thorough research before investing can help mitigate potential losses and navigate the changing regulatory environment. Conclusion. While Tether's status as the largest stablecoin has brought it into focus, it is important to recognize that the speculation regarding the SEC targeting Tether remains speculative at this point. However, the ongoing regulatory crackdown on the crypto industry underscores the need for increased transparency, compliance, and regulatory clarity for stablecoins like Tether. By addressing concerns and engaging with regulators, Tether can contribute to the development of a robust regulatory framework that fosters trust, stability, and innovation in the cryptocurrency ecosystem.